Hi everyone. So welcome to the weekly analysis of week 38 on Dalal Street. So we'll cover whatever happened in the week gone by, whatever sectors look good, right? And how are the FIIs positioning themselves? Okay. And if you want to invest, what would be the best sector that you can look at? Okay. So what happened in this week gone by, the very important one was the Fed meeting, right, which happened on the 20th and 21st of September. So on 21st, the Fed chairman, right, he said that they are increasing the rate by 75 basis points and taking it to 3.25 range. And they also pointed out that the inflation remains pretty high and they are going to continue increasing the rates, and probably by the end of this year it is going to be around that 4% range, and by the end of next year it is going to be around 4.6%. So this is not a great thing for the other economies, especially someone like India, right? What is going to happen is, if Fed continues to raise interest rates, then rupee is going to weaken unless the RBI also comes out and says that okay, we are also going to increase the rates. But RBI, if they continue to increase rates, as you know, the inflation in India is not that bad. It is around the 7% mark. So if we continue to raise rates aggressively, there are chances that the Indian economy might start to slow down, right? So the RBI is kind of in a dilemma whether to raise rates or not. If they raise, then the economy slows down. If they don't, then the rupee starts to weaken. As of yesterday, the rupee has gone even above the 81 mark, right? So on that particular day, that is after the Fed hiked rate, it was around 80.86, but yesterday it went even higher than 81. Okay, so this is what is happening on the global scale. Even all other economies are increasing their interest rates so that their currency remains intact and also to cool off the inflation. Okay, so due to that, the Dow had a pretty decent correction, even the Nifty had a correction, and the FIIs have again turned sellers since last week. Okay, so this is the main thing that happened in the week gone by. And also, one more theme that is playing out is Euro plus one. So many people are saying that okay, this is now the China plus one thing, but this might be a temporary one, not a long term one. Let's say in another 6 months or 1 year until this whole Russia thing resolves, right? So you might see that the most of the plants in Europe that are functioning, especially the pharma and chemical companies, right? What is happening is all those plants are shutting down or running at 50% capacity, because of which the prices globally are going up. And definitely, since there is no such problem in India, the Indian companies, especially the pharma names or even the chemical ones, would benefit out of this, right? So although there is a demand is cooling off, but since the supply has gone down even lower, the prices are moving up, and the Indian companies would benefit from this. So if you look at something like Nifty Pharma, although Nifty was correcting and all other indices were correcting, in the weekly chart, the Nifty Pharma has given you a reversal candlestick pattern, right? So it was around that support mark, and it has given you a reversal as well. So looks like money is finally flowing into these sectors, which are going to come out with better set of results in the coming quarters, and not really going to be affected with the economic slowdown, right? So pharma is one such sector which is actually showing strength and kind of reversing, while the main indices are cooling off. So some of the pharmaceutical names that also look good are something like Abbott, which has uh, taken support at which has taken support and rebounded, right? It is very close to its 200 DMA. Let's see if it kind of crosses that. So the volumes are also good, and the accumulation was also pretty decent. So looks like this is one good stock which can rebound from the current levels. The next one is Sun Pharma. Again, this particular stock had higher volumes and kind of moving up, which is also above the 200 DMA thing. So this is also showing strength especially when all other indices were cooling off. And also some chemical companies, like I was talking about, a lot of these chemical companies should also benefit. So something like a Gujarat Fluorochem, right? This one is also trading almost near its all-time high and showing strength in this weak market. So this is about pharma and chemical companies which would be benefiting from whatever is happening in the Europe i- region, okay, Eurozone. And then comes the Nifty FMCG. So what is happening is people are moving to defensive stocks. So FMCG would be their preferred pick. So people are investing again, going back to these defensive sectors where they can be sure that okay, they are not going to lose much money, right? So FMCG did extremely well. It is trading at almost a new high, you can say, right? So if you look at the last 52 weeks, this is trading at a 52-week high, the FMCG sector. And the two big stocks, those guys are also trading at a 52-week, especially ITC, it is trading at 52-week high at 346 high, very strong volumes moving up, right? And even Hindustan Unilever gave a big reversal candlestick pattern and kind of broke out of a, you can call it a small cup and handle kind of a thing on the weekly chart. So this also looks good, although it is not near its all-time high, but the closing is very strong and it has crossed the this particular resistance as well, and the volumes have also increased as we move higher. All right. And then comes the pain point. So the pain point for this Nifty is the Nifty IT. The FIs have been completely hammering this particular index, especially since the last 2 weeks. And even if you look at most of these stocks like TCS, Infosys, they have lost big in the last, let's say, 15-20 days. Right. So this is what is happening in the Nifty IT. People, due to recession fears, are continuously dumping these IT stocks, and because if the whole globe cools off, right, then IT would be the sector which would be affected the most. But if you are someone who's a long-term investor, right, you can start doing SIPs, although I would not suggest a bulk buying thing. So if you have, let's say, 2 year, 2.5, 3 year kind of a view, then you can definitely start chipping in slowly. And probably if you get a big drop, right, and then you have a deep recession and things like that, that would be the time you can go all in, or let's say put that bulk thing and buy in bulk, and let's say after that you should be rewarded handsomely in the next 2 or 3 years. So this is about Nifty IT. Now coming to banking. So in banking, what was happening was the FIs were continuously pumping in money. And if you see the rally from 32,000 to 42,000, almost a 30% kind of a rally, which also drove the Nifty higher. But now finally, these guys have started booking out, that is the FIs, and they have started selling the banking names as well. So it gave us a reversal candle, and looks like if the FI selling continues, things might get worse, and you can even head lower, right? Because in the last 3 months itself, the 3 4 months, the index itself rallied some 30, almost 30%, right? So now coming to what is happening in Nifty. So Nifty was trying to make a higher high but kind of failed to do that. So if you look at it, so the higher high previously was somewhere here, it did not close above that, came very close to that, but it is reversing from there. Even the weekly closing does not look that great. Probably it might take support at the 200 DMA, or else it can even crack below that if the FII selling intensifies, right? And coming to the mid cap index, so mid cap index, after breaking out of this, again it found resistance at this point, and it is also having a very similar chart to the Nifty, two red candles in the last 2 weeks, right? Similar thing with the small cap index. Small cap index took resistance at the 200 DMA, and it is kind of cooling off, right? And the accumulation is also not that great. So if the accumulation was great, we could have said that okay, the DIs are buying and it is a great time for us to also average our stocks and things like that. Very few pockets, that is the pharma, the FMCG names, and even the chemical names are seeing some accumulation, but rest of the market, nothing really happening, right? So if you're someone looking to average it, probably wait for the accumulation to improve and then kind of start chipping in, because you don't know how deep this correction can be, or how long it can be, right? So it is best to accumulate with the big guys rather than just trying to find the bottom without any data supporting it. So I hope this helped. Let's see how the market behaves the next week, and after the next week's action, I'll again be making a new video. Thank you all for watching.